Good morning. I, Amit Kumar Oda, welcome you all in today's lecture of financial accounting. Today we will discuss what are the objectives, various advantages, and limitation of financial accounting. In the previous lecture, we have discussed what are the basic accounting terms that will be used in our financial accounting in all the chapters. So now we are moving further in this video to the objectives, advantages, and limitations. First, what are the objectives of accounting? Why we prepare accounting? What are the needs to prepare accounting? So here are the objectives of accounting. First is to know profit or loss. Every organization wants to know they have made profit or loss at the end of the financial year, because every businessman do the business to earn more and more profits. So if we are unable to let him know what the amount of profit or loss he has made, he will not be get motivated. So the prime objective is to determine the profit and loss by the accounting. Second is to know financial position. Financial position means what are the assets and liabilities of the organization is having. So we prepare balance sheet in financial accounting, which contains all the assets and all the liabilities of the organization. To facilitate management for control. Management also needs to have information from accounting. When the accounting will provide the necessary information to the management, on the basis of accounting information, management takes several decisions, and it is again an important objective of accounting behind preparing the financial accounting. Providing accounting information to the users. In any organization, there are so many persons which are related to the organization. These are known as users. These can be internal user as well as external user. Internal user means the person which are from the organization itself, like like owner of the organization, management, and employees. External users are the persons which are from the outsiders, like vendors, investors, creditors, bankers, etc. So they also need to have proper information regarding the accounts of the company. So they also wants that company should prepare accounts, and they are interested. They are also eligible to see the accounts prepared by the organization. Maintenance of business record. One of the most important objective of accounting is also it maintain the business record chronologically. Chronologically means day wise, time wise. Now moving to the advantages of accounting, there are so many advantages which are associated with the accounting, which are first is replace memory. By keeping accounts, we need not to remember each and everything. And in reality, a businessman cannot remember each and every transaction in his mind, because our mind capacity is limited. So we cannot remember each and every transaction. And per day, there are so many number of transaction a businessman do. They he cannot able to remember each and everything. So by preparing accounts, we can replace the memory. Helps in comparison. By preparing account, we can compare the records, we can compare the our performance of the organization with the previous year performance and with the other competitors also. Evidence in court, in case of any uh, in if there is any controversy, and in that case if there is any dispute, in that case accounts are eligible as a proof to be shown in the court. Facilitate sale of the business. At the time of sale of the business, when we have maintained our accounts, we are having our financial statement, we know how much worth is our assets, so we can get the sale value of our business easily with the help of accounts. Helps in management, as we have earlier discussed management, it also helps accounts provide various important information to the management. On the basis of that, management take various decisions regarding the planning, decision making and controlling. Provide financial information, what are the assets, what are the liabilities, what are the profits and loss, all we can know through the accounts. Now moving the most important part, what are the limitations of accounting? Though there are so many advantages of financial accounting, but still there are some limitations also, and we cannot avoid these limitations of the accounting. First limitation is accounting is not fully exact. Accounts are not 100% correct because accounts are based on some estimates, and those estimates can be correct and incorrect. If all the estimates we have taken are correct, accounts will also be correct. If there are any incorrect estimates, the account will also become incorrect. For example, assume we have considered the life of a machine of 10 years and we are charging the depreciation as per the life 10 year. For example, the cost of the machine was 10 lakh and the life is 10 year. As per the straight line method, the depreciation per year will be 1 lakh rupees. We have charged depreciation in the past 8 years at the rate of rupees 1 lakh. But at the end of the 8th year, the machine is now not further useful. Now, what we should do? In that case, the amount of depreciation should be 10 lakh upon 8. That comes to 1 lakh 25,000. But in the past 8 years, we have charged only 1 lakh rupees. So, we can say the accounts of the last past 8 years are not fully exact because these are based on the estimates, and estimates can be correct and incorrect. Second limitation is accounting does not indicate the realizable value. By preparing account, we cannot get the realizable value of our assets because in accounts we prepare balance sheet on the basis of cost concept. That means the cost price is recorded in the books of account, and every year we reduce the amount of depreciation. But the value cannot be the same in the case of if we go to the market to sell the assets. So it does not indicate the realizable value. That means whatever we have shown, whatever we have recorded in the books of account, that is not necessary that we can recover, we can cover from the market. For example, if we have taken a machine of rupees 10 lakh and we are charging depreciation of rupees 1 lakh, after 8 years the value should be 2 lakh rupees, but it is not compulsory that in the market we will get rupees 2 lakh for that machine. So it does not indicate the realizable value. Accounting ignores the qualitative element. In accounts, we record only quantitative things. We don't record qualitative element whether they are important or not. For example, the customer, the employees of our organization, how much they are loyal, how much they are hardworking, how much they are punctual, dedicated, that is not recorded in the books of account. While the success of any organization depends on these parameters of the employees. Next is accounting ignores the effect of price level change. In accounts, we does not consider the price level. Price level means the value of 1 rupee, that is keep on changing every day. So here in accounts, we record all the assets on the basis of cost. Whatever the cost has been incurred to purchase on that assets. So it does not consider the price level changes in the calculation. Next is accounting may lead to window dressing. Window dressing means misrepresentation of the facts. That means showing in the books of account that condition which does not exist in the reality in the business.